Hi, I'm Tom Elliott, Director of Beulah Capital. With me is Dr. Peter Mavromatis, Chief Investment Officer at Beulah, and welcome to the December quarter financial markets update. Well, Peter, it's been a difficult time in markets. We've seen commodity prices falling. Of course, the Chinese economy appears to be slowing. US interest rates are rising. Share markets around the world have taken a bit of a hit. How have we been handling it?
Well, Tom, we anticipated that there would be an increase in volatility at some point throughout the cycle. And as a result of that, we've held much higher than normal levels of cash in our portfolios. This has served to act as an excellent buffer in this difficult period. We've also held stocks that have benefited from the falling Australian dollar. We've talked about these in the past, such as CSL, Brambles, Amcor, and of course QBE, which is also a beneficiary from rising US interest rates.
And of course the Australian dollar down at below 69 US cents at the moment. A lot of people think it has further to go. What about our exposure to resource stocks as well? Because one of the reasons the Australian market in particular has been hammered is falling oil and gas prices, the ultra low iron ore price. What have we done there?
So we've heavily reduced our exposure to resources throughout 2015. We still hold stocks like BHP and Rio because we think long term they're very good companies, but we certainly don't hold them to the degree that we once did.
Okay, and the good news is that our main equities portfolio has substantially outperformed the market for the reasons that Peter has just identified. Of course, the other portfolio we run is the takeover target portfolio, which is something I've had a strong personal interest in for about 12 years now. And the takeover target portfolio also over the past quarter outperformed the market just. It had a solid positive return. Some of the stocks that did well for us were of course Beulah Cheese, and Peter, notwithstanding the weaker Chinese economy, Chinese demand for Australian dairy products continues to go through the roof at the moment, doesn't it?
Absolutely, and we've seen that sector really explode over the last 6 weeks with Beulah Cheese and Bellamy's and a whole bunch of others which are related to that particular space perform astronomically well.
Other stocks that did well for us were Flight Centre, notwithstanding the fact that the Australian dollar is weaker, and also Investor Office Fund, which has got a takeover bid on the table by Dexus Property. That's just been approved by the ACCC, but the good news is that a Chinese sovereign wealth fund might be going to enter the fray as well. Of course, this isn't always plain sailing. Some of the stocks that did badly for us were Horizon, Oil Search, and of course S32, the spin-off of BHP, all of them associated with the commodity markets. The good news being we haven't had particularly high exposures. And finally, Peter, before we go, what about our fixed interest portfolio?
So Tom, as you know, we've been anticipating US interest rate rises for some time. So as a result, we've had a very defensively positioned portfolio there, which has been dominated by duration managers. This means when interest rates went up in the US, often that results in a big sell-off in bonds. Because we've had the types of managers in place that we've had, such as Henderson Tactical and LTS Bond Fund, we've held up relatively well.
Well, that's good to hear. Thank you very much for your company, and we'll be joining you again in 3 months' time.